The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we are going to go ahead and get it started off. By the way, if you have any questions, feel free to go ahead and give me a call. You can reach me right here at 877-927-6648. Again, that's 877-927-6648 for any of your stocks, futures, forex, options, binaries, or Nadex spread questions. I'd be happy to help you out. And going over and looking at everything, it looks like we got the S&P down 3.75. We got the Nasdaq down 12. We got the Dow down 16. And the Russell is down 4.3. Gold right now moving in a shake-in, down 26 points on the day. It's a $2,600 move in one contract. And we got copper relatively flat. We got silver, oh my gosh, 2.85% move down right now. And commodities just falling right there. You got oil down 70 cents. We got corn down 5. We got soybeans down 12 points on the day. Euro dollar is up 38 pips. Pound dollar is up 3. Aussie dollar is up 56. US yen down 40. US franc up 5. And US Canadian down 32 pips on the day. So right now, dollar showing strength across the board. And we got the markets basically just waiting to see what's going to happen. Of course, that big day is going to start off tomorrow. We're really looking to see what's going to come out with all the ADP numbers and everything else. And wanted to go ahead and check out what do we got going on the news. All right, so let's see here. Pull it on up. And what we got this morning, we had the Spanish unemployment change number at 3 a.m., and it looks like the expectation was 90,000, and it was 74.3, which is good. And so they basically came in, the unemployment change basically dropped, and that's what they want. They want that number to go down. So that was a positive thing for the euro, and did lead to a little bit of a euro rally there. We can even pull up some charts on that, and we can see exactly what happened when that came out. And let's see. There we go. We got euro dollar. Let's open her on up and go into the wee morning hours here. Here we go. And let me back on into a 10-minute time frame. I always like to look at 10-minute bars lately if I'm using timed bars. And let's go right on over here and we'll check that out. Okay, so 3 a.m. we got the market right there. Unemployment change number came out. Actually, it's 4 a.m. Eastern time. Here we go. So number came out. You see it sort of did a little pullback right there, and then it launched right up. Basically, just kept going up. On that number did pull back, but managed to find a little bit more strength before it turned on back around and went down. And then we had that construction PMI over in Britain. Well, over in Britain, that number came out at 4:30 a.m. And we can look right here and see, okay, so how did that number come on out? So we'll hop on over. I got this right here, 5:30 a.m. And at 5:30, construction PMI came out, and it came out a little worse than expected. Not like horribly worse. And so the number dropped. Number one, basically it just oscillated. Then finally it decided to give up the strength, and the dollar actually gained a little bit on the pound dollar right there. And then looking on over and seeing what do we have? We have the rate statement, U.S. Canada. So and basically it came in at 1%. That was the expectation, and that gave strength to the Canadian dollar, sticking to that rate. They didn't make it any weaker. And you can see, it's not, didn't take a chance to figure out where that one number came out. Right at 8 a.m., boom, Canadian dollar got stronger immediately compared to the dollar, and went on down just right away, and had a nice move. And then looking on over, we had, let's see, I want to say last night, we had the Aussie cash rate come on out. And let me pull that one up right here. Let's see. We got Aussie USD. All right. So Aussie cash rate, 10:30 p.m. And so that would have been 9:30 p.m. Right over here. We got the 9:30 p.m. rate. Really not much of a move on that at all. Oh, here we go. Okay, I was like, something's not lining up. Got to get my time zones right. But anyways, there we go. So we got that one going on, and then basically they left their rate unchanged, giving strength to the Aussie by not weakening their currency further by lowering their interest rate. They did expect it to come in at 3%. It did come in at 3%. And by the way, that is a change. If you didn't know that, the Aussie rate was at 3.25%. And, so they didn't leave it unchanged. They met expectations. The expectation was that the Aussie dollar would change their rate to 3%, and they did change it to 3%, down from 3.25. And it is interesting to look at that because by lowering their interest rate, they basically made it less valuable to hold the Aussie because that means they're paying less interest. So if you're, borrowing Aussies, if you're borrowing dollars to go out and, buy Aussies, then, that means you make less money on what's called the carry trade. And but basically what they're doing is they're also showing that they're serious about monetary statements. And so that could bring strength to their economy, to their currency, and that's why they've lowered their rate. And they've lowered it twice now over the last several months. In September it was 3.5. In October they lowered it down to 3.25. And now they've lowered it down to 3. So that will cause a bit of an inflationary environment, but right now that's given, like I said, the strength to the Aussie dollar. And did give it a decent little run right there. It's moved up about 55 pips or so on the day from its low to its high based on that statement. And that was the one thing we said to definitely watch last night. There also was a report at 7:30, and that was the building approvals report. But having a cash rate come out right, a couple hours after that sort of stunted that move quite a bit. We got a little move on it, but nothing really worth writing home about. But anytime you have that Fed funds rate, that's going to be the market mover for the day, and it definitely was. And so let's check out what else do we got going on tonight that you need to be aware of. Tonight we got the Aussie dollar is going to be in the spotlight again, and it's going to have its GDP number come out. They're expecting 0.6%, and so you're definitely going to be watching the 0.6% right there to see how their GDP comes out. And there we go, a little adjustment on that. And so let's see, 0.6. And if you want to get the number or the website for that, just go ahead and give that to you real quick. We got, let's see, abs.gov.au. That's where you're going to be able to get the information for the GDP coming out of the Aussie dollar tonight. And so you can stay on top of that and watch it right there. And what do we got coming out early in the morning tomorrow? Not a whole lot until 4:30. Britain keeps going. We talked about this. It's going to be the British PMI coming out at 4:30 a.m. I just want to get you caught up till the show tomorrow. But 4:30 a.m., the pound dollar's coming on out. And you'll be able to get that over at marketeconomics.com, M-A-R-K-I-T, economics.com. That report will be posted right there for you. And then you'll be able to get the autumn forecast statement from Britain. That's going to come out from the HM Treasury. So right there, get that. And that's hm-treasury.gov.uk. And so again, you get that right there. Again, that's the autumn forecast statement. That's basically it provides an updated economic outlook for the government's budget for the coming year. So what are their borrowing levels going to be? What are their financial objectives? Independent economic forecasts are actually built into it. So it's a pretty big annual, it's sort of a pre-budget budget report. And it's very important. And basically it will affect the pound dollar when it comes out. And then we got on over the ADP non-farm payroll. We got the fun stuff coming out tomorrow. Non-farm payrolls, ADP. They're expecting the number coming at 129,000 right now. And so what we're expecting is to see, basically it doesn't beat that expectation. They've been undershooting it constantly. So would not be surprised to see them undershoot it again. Number comes in more positive than expected. And the market does rise if, of course, that happens. So we got the non-farm payroll, and then you're also going to have the ISM coming out, the PMI ISM coming out right after that. And so Institute for Supply Chain Management, you can go over there to the ism.ws website, or you can just hop over at Market Economics. That's where all your PMI numbers are. And that number will come out at 10 a.m. tomorrow. So that'll bring us on through to the rest of the day for tomorrow. So you're set up and ready. You got your fundamentals in place, and you need your fundamentals if you're going to be trading. Because you need to know where, those... You don't want to get hit out of left field. You've ever been in a trade and all of a sudden just bam, hits you. And that probably was a fundamental report, or it was just some sort of news announcement coming out. And a lot of times I'll have news up, I'll have it on silent for just news itself. And just so I can see the headlines popping up. All of a sudden, bomb goes off here. Well, yeah, that's a good thing to know. So I remember one day I was trading, and all of a sudden the market started going crazy. And I was trying to figure out what was going on, and it was Obama flying Air Force One right by the Statue of Liberty, and right near downtown New York City, and neglected to tell anybody about it. And all they knew is that there was a massive jet coming in and flying right around Battery Park. And they're like, what is going on? And of course they figure out what it is. Like, well, it's Air Force One, so obviously everything should be okay. And then, oh, sorry, we were making our annual Air Force One calendar for the year, and we didn't tell anybody. So, but I never would have known that looking at a chart. I didn't know the market started dropping, going a little bit crazy. I was listening to the pit, and they were like, we don't know what's going on. And then I saw a headline come up, and the pit announced, hey, it's okay. And it was about 15 minutes of crazy. And then everything went back to normal. So as soon as they figured everything was okay, market resumed, went back long, and kept going. But not knowing what that event was, I would have thought, well, is the market going down now for the day? What's going on? So I knew it was, okay, chilled out. Market resumed back into what it was doing, business as usual, as soon as that event was over. So news has its place. It's more of an alert. It's a heads up. It's sort of like seasonal cycles. They have their place. Seasonals are not something you trade solely based upon. You don't go to just buy or sell based on a seasonal. And but what you will do is go in and be aware that the market usually goes up or down on these days by 60, 70, 80% of the time. And certain seasonal cycles have a massive impact. It doesn't mean you trade it because, what, 70% of the time could be the next 3 years. It doesn't do that, okay? But what it does do is to say, be aware that the market tends to rise on this day of the week. Be aware, this is happening. And by doing that, you're just a more well-rounded trader. So I think technical analysis and, chart analysis and volume analysis, I think that's king, okay? You always follow the charts. At the same time, knowing that there can be, certain things that are impacting, because, you're trading and sometimes you go, why did that happen? Well, because the market usually rises on the 1st and 15th of the month, basically the beginning and middle of the month because of payroll cycles. Just knowing certain things about market economic cycles, about what, why does the market a lot of times pull back near the end of a quarter and then all of a sudden push back up really strong? Well, because mutual fund managers may be taking profits, whatever, but also if there's lower than expected, basically if the expectation on somebody's stock, what you'll see is they'll build up the expectations later in the year and they'll lower them. For the beginning of the year, what they do is they put really low expectations. Lower expectations, and by putting those lower expectations in, then expectations get exceeded. So how does that help you? Well, knowing that the expectations are lower than they should be, then all the mutual fund managers start buying in like crazy because they don't want to miss out on the market. When they buy in, they actually buy in ahead of the earnings announcements. Stay there, folks. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, this is Darrell Martin right here back with the Diagnostic Trading Hour, and we're seeing this where everything is moving and shaking in the markets today. And right now, looking on over here, we got the Aussie dollar right now still moving on up. Let's go ahead and check out our statistics. We got our fundamentals. And like I said, I always like to look up these statistics on the market. One of the number one pieces that I'd say is missing in most traders' trading plans is their statistics. They don't even think about it. They're like, oh, that's a scary word. I don't even talk to me about statistics. I don't want to know about them. I don't want to look at them. I don't want to think about them. I'm not talking about doing a whole lot of math here, okay? I'm literally just talking about just being aware of just how it works. So let's go ahead and check this out. We got, let's go on in, and statistics are basically how far is the market going to move. And you can do historical statistics to try to project future movement, but again, it's historical. And as you always know, previous performance does not indicate future performance. So what are you to do? What are you going to figure out? Well, we're going to look at something pretty simple. We're going to check out basically looking at how far the market expects the market to move. And so if I look over here at the S&P, then what I can do is see that the S&P has moved right down to a low today of 1401.5. And so right now, how much further should I expect it to move if it keeps dropping? And that's where something like an expected move comes in. And by expected move, it can't just be an expectation. I mean, it can be, but probably don't want to look at an expectation for how to use, expected moves of historical movement. It's like, how do I get the market's expectation of the market's movement? Well, something like diagnostic deviations. They pull implied volatility out of the options market. They look at 4 different options for each month over up to 3 to 4 months. They make we could say a volatility index, and they tie that into a deviation formula that's meant for short-term deviations. There's deviation formulas meant for long-term, and there's deviations meant for short-term. This is a deviation formula meant for short-term trading. And looking at this right here, we got the diagnostic deviations right here. Moving down, it says, hey, the lowest we should expect the market to move is down to 1400.1. So we got pretty close. Market's pulling back. You may want to tighten stops, okay? 1400.1, we're only a point off of that. And usually, if I'm within a point or so, I'm going to be tightening my stop. So if you're short, now's the time to tighten, okay? We'll go here. Let's check out our NASDAQ. Well, our NASDAQ right here, we had an expectation. Let's see, it's moved on down to a low 2650. We had an expectation of 2656. Well, we've already hit that, okay? We had another expectation for it to go down to a low 2651. Well, it just hit that level. So at that level, you definitely would be tightening your stop. So if you would have tightened it here and tightened it again right here, then you would have been stopped out, and the market's been oscillating ever since at that 0.7 deviation level. If we go on over and we look at the Dow, the Dow's moving on down, and you've got to have something like this to help you manage your risk management. We had a high of 13,008, and that's just 4 ticks off of a half deviation high there. Market turned on back around, and looks like it's at a low of 12,924 right now. That's really nothing. I mean, it basically moved up about half a deviation, and it's just flat. And so, right now, I mean, it's anybody's guess. It could be flat all the way to the end of the day. Who knows? But let's hop on forward, and I basically, if I was in the Dow trade, I'd probably just be out because it's not moving fast enough for me. Cost of time, money. Basically, when you're in a trade so long that you're giving up money because of how far it's not moving. So unless you're trying to make money on time, that's when you go neutral strategy. So that'd be where you could go in and you could actually do some deep in the money binaries, and you could collect premium. And that's a very, very cool strategy that you can take advantage of. And we got a high over here of 823.3. And that, not even quite breaking the deviation, it starts trending down. Well, that's a good sign. Okay, so if I want to go short, how low did it go? Went down to a low of 814.6. We expected a low of 815.2. And then if it keeps going to 813.2, when it hit that first level, we tighten our stops. I hope you're seeing this trend, okay? When it hits a deviation, we tighten a stop, okay? And if you'll start doing that, then you'll be able to manage your profits. And I trade Nadex quite a bit. I also trade futures and Forex. And when I'm doing that, sometimes I'll hop on, I'll trade stocks. My only issue with stocks, I love stocks. Stocks are fun. They have, you got 22,000 different stocks just here in the U.S. that you can trade. But you got to filter through them. You got to find the right ones, And your buying power, not as good. I mean, with portfolio margining, you can get pretty good buying power. But still, I mean, the buying power on futures and Forex is awesome. On Nadex is even better as far as, your leveraged ability. So, I love trading on Nadex and futures and Forex. A lot of times if I'm trading futures and Forex now, I'll actually combine it with Nadex. But let's hop on over. Let's check out low on natural gas, low 3.53, and it looks like it moved into 3.552 was the expectation. It definitely hit that. And then to 3.537, we hit that. So as soon as it opened up, it was at a half deviation. It basically did a gap fill on natural gas and pulled on back. So hold on right there, folks. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. One of the things I left off with is we were checking out the deviation levels on the day. How natural gas moved on down directly to a 0.7 deviation level, pulled right off of that, filled in the gap. And right there would have been a great point for a straddle or for a reversal trade. And because it did a gap fill. I mean, that's just how it goes. Let's hop on over. Let's check out a couple other markets. We got oil. Oil just moving down huge last night. And let's go ahead on this one. I'm going to go ahead and I'm going to knock out because the extended session. Let's go ahead and show the overnight there. You can just see how it's trending on down. Maybe you're an early morning oil trader. All right. So you're in oil, it's moving on down, and it actually hit the low this morning anyway, so it didn't really matter. But right here, right on the open, hit a low of 87.57. And you wake up, you see this, let's say 7 a.m., whatever, boom, it's going in, you're going short. How late do you want to be to the party? Because we've all been late to the party. We've all got in, when we shouldn't have. And, all of a sudden the market turns around on us. So what's your clue on that? Well, if you're going short on this, what the diagnostic deviation levels would have said is at 88.29, when it hits 88.29, which would have been right about here, it said, okay, be ready to tighten your stop. So a little pullback, and then it continues in the direction. Okay, that's where we've tightened our stop the first time. All right, well, maybe that's where you got in, okay, if you're trading early this morning. Or maybe you caught this leg right here, and it said, hey, again, if it drops below 87.97, which, I mean, we're getting just about there, haven't quite hit it. 87.97, you need to tighten your stop again. That's the 0.7 deviation level. So, boom, it hits it, you tighten your stop again. And then it says, okay, if it goes down to 87.48, tighten your stop again. Well, it didn't get down to 87.48, so you, depending on how you want to manage it, but you definitely would have had, that would have been your next expectation of move. Okay, you don't expect it to go a whole lot further. And you may come in here in the morning and thinking, hey, I'm going to sell, because, you know, this morning what happens? This is the, you know, the only part of the chart you see. You're like, oil is going to drop like a brick. Okay, well, you only expect it to move down a couple ticks here, man. I mean, like, you know, 7-8 cents. So you don't have a big move. 87.40 is a 1 deviation move. We're not really expecting more than a 1 deviation move on a consistent basis. So just having that expectation alone is going to make you very nervous about going short if you have the proper expectation. And again, that's right here, deviation levels, oil, 87.48. Okay, so I mean, you don't have to tilt your head sideways to see the pattern here. Okay, this is it. It's a number. It's right in front of you. It's in your face. And it's statistics. But it's statistics based on the implied volatility, the expected movement of the market's expectations of how far the market's going to move. And the market is right a lot. So these deviation numbers are incredibly accurate. And so anyways, it goes in there. And so you could straddle if you wanted to take a trade right then. Okay, where you could go to a trend reversal. But I wouldn't just go short when I'm right near a 1 deviation. A negative 1 deviation, because I don't have a lot of expectation of the market to go down. Now, if it does blow through it, I think the market may really move down. Well, then straddle it. Okay, so buy and sell, and you could use binaries, you could use spreads. There's a variety of option strategies you could use for that. But your expectation is that, and look what happens. I mean, the thing moves right on back up, and I mean, we came up back up to a high of what 88.73 on the day so far, and so I mean, it's already been back up towards trying to almost fill the gap on the day. And so let's say you did buy. All right, what are you going to do now? Okay, because now you got to have some sort of profit management strategy on the way back up. So on the way back up, looking over at crude oil, well, 87.97 was my first deviation level. So when it starts moving back up and it breaks through that 87.97 right here, I'm going to tighten my stop. So I got my stop tightened right here, and I bought right here in the morning. Okay, and now I'm waiting for it to break that next level, which was 88.29. So we're going on up, but it hits that too as well. So this, I'm honestly probably my own trading, and this wouldn't have necessarily been the best trade, but I would have tightened my stop right here, and I would have got stopped out. And I'd have been okay with that, because you know what, maybe the market's going to just oscillate right here between these two levels all day. And it did continue on up. Now the other method you can use, and one of the methods I do often use, is I will tighten my stop either when it hits a deviation level. If it's flying far, I'll tighten it on every bar. Okay. A third way that I'll tighten my stop is I'll wait for the retracement. Now, I already have a stop right here, okay? But say I get another stop right here, because this gets me basically at break even. That's why I have that as my stop, because now I can't really lose on the trade. And but I'll wait for a small retracement and a breakout. As soon as I get that breakout, that's what I call an apex. So it's like alert, pivot, entry, and then confirmation of trend. As soon as I get that breakout, then I'll tighten my stop up to the low of that breakout, that pivot level, okay? So at that pivot level, I'm going to tighten it again. And then right here, notice what happens. And I haven't hit a deviation level yet, but I could easily continue to tighten my stops this way. It's one of my favorite ways to tighten stops in all of the ways that I trade. This is the most consistent way that I'll tighten a stop. I'll use the deviation levels to wake me up and tighten them, but also as far as like exactly at what price do I want to tighten it at. Every time I see that, you know, alert bar meaning a lower high, pivot bar meaning lowest low since the alert bar, okay? And then the E bar being it broke the high of the previous bar, and then X bar being it broke the alert bar there. So alert, pivot, you know, entry, confirmation. Okay, so I tighten my stop again, and right there, and then on. So I would have tightened it here. I would have got stopped out on this bar right here. So that would have given me a few more ticks versus a tick at a low of 88.14. That would have given me a low of 88.31. So, you know, not too bad. Would have captured like $170, $180 more right there on that trade just by tightening in that method, and the market's just been oscillating ever since. So, you know, profit management is so massive, and most traders spend so much time focusing on risk management they never get good at profit management. And so you want to be able to, you know, tighten your stops effectively by giving them enough room to, you know, make some money so you don't, you know, get out too early, but also not giving them so much that you give it all back up. And that's a fine balance. And so that's why I combine the deviation levels with that, you know, A, P, E, and then confirmation, you know, pivot, entry, confirmation trend to tighten the stops up at every pivot point after there's a dip. And let's see here. So we hop on over. Let's check out a couple other markets. We got the energies out of the way. We got the indexes out of the way. Let's go ahead and check out gold. Gold's been a moving. Silver's been a moving like crazy today. And we got gold down to 1892.6. 1692. I'm like, what? 18. Gotta get my glasses on, all right? 1692.6. And wow, I mean, just moving like an insane amount. And so let's see, just how would the strategy we just talked about on tightening stops, how would it have worked? You know, and I haven't even looked at this today. I honestly didn't trade gold today, which I would have now, obviously, but I didn't. But let's check it out. How would it have worked? Okay, well, the market opens up, and you can see we got our deviation levels right here. Okay, 714, 1712, 08, 01, 95, 82. All right, so what happens is the market moves down, and it hits 1714. Okay, so we're waiting on that move. It goes down, boom, 1714.6 right here. And then it's moving a little bit further. And we can see 0.6. There we go. We hit it. And so now we got to tighten our stops. Okay? So we tighten them at either this level right here immediately, or we tighten it at the last, apex, that pivot level right there. So we tighten it at the pivot level. And then we got 1712. So now we're waiting on to move down to 1712. Boom, hit 1712. As soon as it hits that, I'm going to tighten it to that next pivot level. Okay? And now we're looking at 1708.1. So now it moves on down, and we hit 1708.1. Okay, so immediately I'm going to tighten it to at least the next pivot level. I'm already at the pivot level. So I don't know about you. When I see a move like that, personally, I'm looking to usually grab it. But so either you're really disappointed and you left it there, or maybe you moved it to this stop. If you did, you were just asking to get kicked out, and that's what happened right there. People just bam knocked those people out before they took them down. So either you left it here, or you moved it down and you got stopped out right here. This would be probably the more wise move. And then now you're waiting for another pivot entry. Okay, so we get a pivot entry, say right here. Okay, so we're looking for basically a break of the previous bar's low. So we get that pivot entry, actually right here. All right, so we get back in after getting stopped out right here. We're pretty happy, but we're hopped on back in. And binaries and spreads, you have defined risk. So you're not worried about getting stopped out. So market moves up against you, and so it's going on up, moving on down. Now you're waiting for the next potential. Now this is if you're actually going to keep trading. Now the reason you might consider to keep trading on this day is it broke so far down that, it went through 1, 1.5, almost 2 deviations. So you may have also bought on this. But let's say just, with that strong move down, you decided, hey, I'm going to go ahead and sell. So you sell because it's busted through, not just like, not just trickled through, but it is busted through the 1 deviation. And it's actually almost, like I said, almost a 2 deviation move down. Anyway, so you go short right here, and, you're not worried about your stops because Nadex is your stop. So if you get in, and then now you're looking for a move below this level, so we're going to look for a move at 1701.6. Well, the market's moving on down. And there's 1701.6. So as soon as that happens, I'm going to tighten my stop, okay, basically to break even at this point. And we get down there, or the most recent, you could say, pivot. So you could say this was a pivot, pulled up, pulled back. So there's a pivot for you. And then we're going to move on down to 1695.1. So we're waiting on that move. Okay, we hit it right there. Okay. So now we got a little bit of a, pivot level right here. And, basically at this point, now we're waiting on to move down to 1682. We haven't hit that yet. Market oscillates while we're waiting to tighten our stop. We haven't really got another pivot at this point. And then the market closes out at 1695. So you could have hopped in, like I said, early this morning. You could have been short last night. But you could have used the diagnostic deviation, which was simply tightening every time there's a pivot or tightening at every deviation. And that would have helped you capture a good chunk of the move. And like I said, you may have stopped here. You may have just been done because it broke so far. But still, you captured 15 points on gold. So you don't have to capture, all 25. But so it's not a bad thing when you do. It's an awesome thing. So anyway, so we got that going on right there. The market right now looks like it's doing a whole lot of nothing. And let's see here. Let's check out silver real quick. But the market is going to move when there's something to move for. So basically when Boehner or Obama or, whoever decides to come out and actually say something on the news, then the market will move. Right now, it's waiting to see what these unemployment numbers come out. It's waiting to see if we get any kind of real announcements out of D.C. And until that, there won't be a whole lot. But basically, D.C. is confused. It has no idea what it's doing. It's in total. It's more than gridlock. It's stalemate. And how is that more than gridlock? Well, gridlock means the market's not, no cars are moving, but there is expectation that eventually they'll clear the way. Stalemate means the game is over. So we'll just see. But, you got congressmen laughing at congressmen. You got, it's utter chaos. And I just have to say congratulations to America for electing it for 2 more years. So, I mean, my goodness, we got what we asked for, I guess. Not as a whole, but I mean, at least part of us. Anyways, I don't even know what to say to it, but but yeah, the market's just, it's not going anywhere. So I wouldn't, go in and enjoy some premium collection today. Hopping on over and looking at, okay, we got a few more markets. We got corn and soybeans. Let's check them out. Not massive movers on the day, but nevertheless. We got a low right here of 746.75. We expected it to drop down to 750.3 and then 748.5. So you can see right there, 748.5, that's where you're going to tighten your stop. And so you can tighten it either at the apex level, or I like to tighten it when it breaks the deviation level, as we were talking about. And when you do that, boom, comes up, knocks you out. Good trade. Hopping on over on soybeans. So obviously, it wouldn't take a genius to see that's trending down for the day. I can look right here. I can see entry points everywhere. Entry point, on down the list. So basically, an entry point for me is you get a lower or a higher low, okay, on a short. Higher low when it breaks the previous low. So the market's going in, it's doing a pullback, and then when the momentum goes back in your direction, that's when I'm getting in, okay? So, boom, there's my entry, there's an 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 entry, so there's a lot of entries. Anyways, but, if you took either one of these right here, pretty easy trades. How far down did it move? Went on down to a low of 1436. And soybeans, we had an expectation of 1445.2. Well, we got that, obviously. And so let's say you got in right here. Boom, 1445.2. Okay, great. We can, break even the trade. Now we got to move down to, further down to 1441.8. Okay, we get on down here, 1441.8. So now let's go ahead and just tighten that stop to the most recent bar. Now we've hit the deviation level. Then we got to move down to 1436.7. Okay, so we're going down, 1436.7. Boom. Okay, let's tighten our stop right now. And by the way, 1436.7 was a 1 deviation move. So you may want to take some profits off, or you may want to tighten even further. But either way, you caught, either got out here, or you just took it out as soon as it hit it, that 1436.7 right there. And that's a perfect 1 deviation move, and look what happened. 1 deviation, it reversed, so now you also have a reversal trade or a straddle trade if you think it's going to keep going. So, but I would not be going just short. I'm either going long or I'm straddling at a 1 deviation level. And hopping on over and looking at, let's check out a few currency pairs here. We got the Aussie dollar. And let's see, what do we got? The Aussie dollar moving on up to a high of, and had that, the news with their rate came out last night, right? So let's look at, different ways to avoid that. 1.0483 was the high. Aussie dollar 1.0483. Okay, check this out. This is the high. This is the deviation. The +1 deviation level for the day. 1.0483. That is how far the market expected that market to move today. How far did it move today? Exactly to 1.0483. So market's expectations are much better than your expectations. Listen to the market. And that's what Diagnostic Trading is all about. To be one step ahead of the market, you got to pay attention to it. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. We're going through and we're wrapping up our diagnostic deviation levels for the day. We're just talking about how the Aussie dollar moved perfectly to a one deviation move. Basically, the market did what the market expected the market to do. And so why should you expect any different? Okay? Let's think about it. All right, let's check out. What's the high right here? 1.0456. Okay, well, we got that 1.0456. So if you're going in, let's say, before this announcement came out, what could you have done with deviation levels? Well, it's an interest rate announcement, so you could have easily went for a one deviation move. You also could have done a straddle, and maybe you picked, half a deviation, or you picked a 0.7 or a 1 deviation on the straddle, and you bought it on both sides. So let's say if you did half, you could have said, hey, if it goes up to 1.0449 or down to 1.0381, and you could have picked those two like binary strikes, or you could have bought a straddle and sold out when it got to either one of those levels. If you want to be a little more aggressive, make a lot more money, then you could have put up, at the plus and minus 1 deviation. Probably could have got those on for a very, very low rate, and with a great risk reward on them as well. So, just ways to trade news. There's a lot of good ways to trade, basically with straddles on Nadex. And let's go ahead and check out just a couple more markets. We got a euro dollar up at 1.3106, 1.03106, and our expected move was 1.3109 with the 0.7, and then if it made a full deviation, it'd move up to 1.03133. And so right here, checking that out, 1.0133 and then 1.0319 and 1.0393 is a half deviation. So how do I play that? What do I do with it? Well, if the market's moving up and you're buying on the market, this was our high. We had a pullback on that. So you'd be putting a stop in, basically right here or right as soon as it hit that level. And again, that level was 1.3109 right there. We were only 3 ticks away from it. So again, if I'm within, 4 ticks up, a point on the S&P type thing, 4 ticks on currency pair, I'm going to be tightening my stops. So, but even if I didn't tighten my stop, I would have tightened it back at 1.03093. And, it's getting up to this level, so I would expect the euro dollar to easily, short at this point. So, and I actually did. I am looking for a short right up here. You can see this level I got right here. I'm waiting on it to see if it'll go up there and hit that for me so I can get in and sell. And so we'll see how that one turns out for the day. But looking for, potential short on back down on the euro dollar today, if it'll move at all. Let's see. It doesn't seem like it wants to move a whole lot. But I do expect it to expire below 1.31 for the day. That's a major resistance point, and it really didn't have a whole lot of strength on it right here when it broke it earlier in the day. We can hop on over. We can also check out our futures. So why would you look at futures if you're trading Forex? Well, futures Forex, right? And futures Forex is going to give you an accurate view of the market, and they're going to let you see volume, with real volume, exchange volume, okay? So check this out. All right, we got a nice volume breakout right there. Check this out. We're going in. We're getting, this is perfect setups. We got volume, and then it pulls back like it should, and then it breaks out with volume. Excellent confirmation of trend. Goes down, breaks out, confirmation with volume. Not near as much volume, so not real impressed, but, volume, not basically, not a 30% change, so we're good. And then it pulls on back down, and finally breaks out definitely with volume. Okay, so cool. We're still pretty comfortable with this trend. And then what happens? Well, wait a minute. We're getting these down bars. Okay, look at this. Down bar with increased volume. Do you see that? So bars closing lower than it was. Bars closing lower. And that's a lot of volume. Now, of course, we should get more volume simply because of what? The market's opening. Okay? But it breaks out one last time. It's in that 1.31. You can tell there's definitely resistance right there. When that happens, you get a volume breakout. A lot of times what happens, they're filling all the stops. Okay? So we'll see how it goes for the day, but I think it'll probably close below the level. We're very close to it. And but you can see they filled all the stops, fell on back down, pulled on back up, expect it to come on back down. All right, everybody have a great day, a safe day, and I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.